Hey everyone, welcome back to the channel. If you're into biotech stocks, pharma giants, or just hunting for those life-changing investment plays, buckle up because today we're tackling a monster in the market. Eli Lilly stock crashes 18%. Is this your golden buy opportunity? Yeah, LOI shares took a brutal hit after their Q2 earnings, but with blockbuster drugs like Mounjaro and Zepbound driving insane growth and insiders scooping up millions in shares, this could be the dip everyone's waiting for. Stick around as I break down the headlines, the numbers, the risks, and what smart money is doing next. We're talking massive revenue surges, obesity drug wars, and long-term forecasts that can make you rethink your portfolio. Let's jump in. First off, if Eli Lilly is new to you, let's get the basics down. Eli Lilly and Company, ticker LLY, is one of the oldest and biggest pharma companies out there, founded way back in 1876. They're headquartered in Indianapolis and employ over 43,000 people worldwide. Lilly is a powerhouse in diabetes, oncology, immunology, and neuroscience. But right now, they're stealing the spotlight in the red-hot obesity and weight loss space with tirzepatide-based drugs, Mounjaro for diabetes and Zepbound for weight loss. These GLP-1 agonists are game changers, mimicking hormones to curb appetite and regulate blood sugar. They've also got Kisunla for Alzheimer's, approved in 2024, and a pipeline full of potential blockbusters. With a market cap around $700 billion as of the 13th of August, 2025, Lilly's neck and neck with Novo Nordisk as the kings of the $100 billion obesity market. So, what sparked the fireworks? On the 7th of August, 2025, Eli Lilly dropped their Q2 earnings bomb, and while the results were stellar, the stock plunged 14% that day, capping an 18% weekly drop, the worst since 2008. Shares tumbled from highs around $900 to about $740, shedding tens of billions in value. Trading volume spiked to over 15 million shares, signaling pure panic. But here's the head scratcher. The earnings actually crushed expectations on most fronts. Let's dive into the numbers to see why. Q2 revenue soared 38% year over year to a whopping $15.56 billion, smashing analyst estimates of $14.8 billion. That's driven almost entirely by their obesity duo. Mounjaro sales hit $4.2 billion, up 120%, and Zepbound raked in $2.1 billion in just its second full quarter on the market. Together, these two alone accounted for over 40% of total revenue. Other winners? Verzenio for cancer up 25% to $1.3 billion, and Taltz for immunology up 15%. Net income jumped to $3.92 per share on a non-GAAP basis, beating forecasts by $0.20. Operating margins expanded to 35%, and they generated $4.5 billion in free cash flow. CEO David Ricks called it a transformational quarter, and they even raised full-year guidance. Now expecting revenue between $58.60 billion from $55.57 billion rupees, and EPS of $16.10 negative $16.60. If the numbers were so hot, why the massive sell-off? Blame it on one big disappointment: Phase 2 trial results for their oral weight loss drug, orforglipron. Investors were hyped for this pill form GLP-1, which could disrupt the injectable market dominated by Lilly and Novo. But the data showed only 14.7% weight loss after 36 weeks decent, but way below the 20 to 25% from injectables like Zepbound. Side effects like nausea were high, and dropout rates hit 50%. Wall Street freaked, seeing it as a flop that could let competitors like Viking, Therapeutics, or even Pfizer catch up. Plus, broader worries. Supply shortages for Mounjaro and Zepbound are easing, but that means tougher comps ahead. Macro headwinds like potential drug price negotiations under the Inflation Reduction Act and competition from Novo's Wegovy and Ozempic added fuel to the fire. The S&P 500 was volatile that week too, amplifying the pain. But wait, it's not all red flags. The stock's already rebounding, up about 3% since the lows as of the 11th of August, trading around $760. And who's buying the dip like it's Black Friday? Lilly insiders? 5 executives, including the CFO and head of R&D, snapped up $2.9 million worth of shares in the days after the crash filings show buys at prices around $740. That's a massive vote of confidence from the people who know the company best. Analysts are piling on too. Out of 25 ratings, 22 are buys with an average target of $950. That's over 25% upside. Firms like Barclays and Jefferies reiterated overweight ratings, calling the drop overdone and highlighting Lilly's dominance in a market projected to hit $150 billion by 2030. Even Forbes is floating 50% upside, citing undervalued pipeline assets like donanemab for Alzheimer's and parasolimab for arthritis. Why the bull case? Lilly's fundamentals are on fire. Obesity drugs are just the tip. Demand for Zepbound is so high, they're ramping production with new facilities in Germany and the US, aiming for $25 billion in annual sales from tirzepatide alone by 2028. They're expanding indications too. Mounjaro is being tested for heart failure and sleep apnea with positive phase 3 data boosting survival rates. In Alzheimer's, Kisunla donanemab is gaining traction as a safer alternative to Biogen's Leqembi, with sales expected to top $5 billion by 2030. Lilly's also innovating in oncology with Jaypirca and in immunology. Year to date, even after the plunge, LOI is up 15%, outperforming the S&P's flatline. Trading at about 45 times forward earnings, it's pricey, but with 30% plus revenue growth forecasted through 2027, it's justified. If you'd invested $1,000 in LOI 5 years ago, it'd be worth over $4,200 today, crushing the market thanks to a 320% gain plus dividends. Looking ahead, Wall Street's crystal ball is glowing. 24/7 Wall Street predicts LOI hitting $1,000 by end 2025, $1,200 in 2026, and up to $2,000 by 2030, driven by $100 billion in annual revenue. They're compounding at 25% EPS growth annually. Key catalysts, upcoming phase 3 data for retatrutide, a triple hormone obesity drug showing 24% weight loss, potential approvals in new markets like China, and partnerships. Lilly's also shareholder friendly, with a $5 billion buyback program and a 1.1% dividend yield that's grown 15% annually. Of course, no stock's bulletproof, and Lilly has risks worth eyeing. Competition's fierce Novo Nordisk is scaling Wegovy production, and upstarts like Amgen and Roche are entering with oral options. Regulatory hurdles. The FDA scrutinizing GLP-1 side effects like pancreatitis, and price caps could squeeze margins. Patent cliffs loom in the 2032 for key drugs. Volatility's real, remember? Shares dipped 20% in 2023 on supply issues before roaring back. If the economy slows, elective treatments like weight loss could suffer. And that orforglipron flop? It highlights pipeline risks. Not every drug wins. But if you're bullish on healthcare innovation, especially in obesity, where 1 billion people worldwide are affected, Lilly's a no-brainer. They're not just riding the wave, they're creating it with best-in-class efficacy and a diverse portfolio. Analysts from Seeking Alpha are calling this another not-to-miss dip, echoing past pullbacks that turned into rocket fuel. So, what should you do? If you're long-term, consider averaging in now while it's discounted. Dive into the 7th of August investor call transcript for the nitty-gritty on orforglipron and guidance. Watch for Q3 results in October. If supply ramps and sales beat, we could see a quick snapback to $900 plus. Track obesity market news, like Novo's updates and insider filings for more buys. All right, that's the full scoop on Eli Lilly's wild week. A earnings beat turned crash, but with insider buys and massive growth ahead, this could be your ticket to pharma riches. If this packed you with value, smash that like button, subscribe for more deep dives on hot stocks, and comment below. Are you buying LOI on the dip or waiting it out? Let me know. Thanks for watching. Stay wise with your wealth, and I'll see you in the next one. Peace.